Stocks on Wall Street bouncing back after a negative start on Wednesday. The S&P 500 now up around 0.8%, but still below the 50-day moving average. Is this rally sustainable? Well, let's ask Victoria Fernandez. She's Chief Market Strategist at Crossmark Global Investments, and she joins us via Skype from Houston. Welcome to our program, Victoria.
My pleasure to be here.
Great to have you. Now, the markets are up for the second straight day, but trading a bit on weak volume. As I noted earlier, we're still below the 50-day moving average. Is this a dead cat bounce, or is this a sustainable rally, a bargain hunting rally?
Well, I think you can look for opportunities to find names, but we're not surprised at the volatility that we're seeing. There's so many uncertainties going on right now in the markets, whether it's going to be geopolitical, whether it's earnings season. There's all sorts of things going on out there. So you're going to have some pullbacks. We expected that, but we do think that we will continue to have a move higher through the rest of the year.
All right. What do you need to see before you think, hey, this recovery is sustainable?
I really want to see the consumer continue to be strong. I know we had poor retail sales numbers come out this morning, both here and in China. That was a little disappointing. And we saw some positive numbers out of Europe, however, which was good. And really, we have Walmart coming out with their earnings tomorrow. That's a great bellwether on the consumer. And so we're hoping to see some strength there. And that'll give us a little bit of a clue as to how the consumer is doing. That's going to drive the market forward. All
right. So should we worry about those retail numbers that we saw this morning on retail sales, or should we wait for confirmation from the likes of Walmart? We already had Macy's reporting earlier.
Right, and Macy's did a little bit better than expected. Now we know they had brought their guidance down previously, but they did pretty well. Online sales are doing really well, which they have been for quite a while. We expect to see the same thing coming out of Walmart. But I think when we look at those retail numbers this morning, last month they were much higher. They came back some this month. I think you have to look at kind of an average. Look at that 3-month span year over year and look at that control group that feeds into GDP. You're still looking at consumption about 3.2% on an annualized basis. That will be good enough, I think, for the market to continue.
Right. Victoria, given the drubbing that the markets took last week, were you in there buying any stocks?
You know, we did. We found some opportunities. We weren't looking in specific sectors, but there were specific names that we were looking at. We added to our McDonald's holding that we had. We were really looking for some numbers that when we put them through our screens, putting through our multi-factor process that we have, they come out on positive side. McDonald's was one of those. We also added to Palo Alto Networks, looking for a name in the tech sector that's not a traditional FANG name, but trying to find some opportunities within the volatility of the market.
When you mention McDonald's, are you looking at value stocks? I mean, value has really taken a back seat to growth all these years.
You know, it has, but when we're looking at where we are in the market cycle, I mean, everyone does the baseball analogy and what inning you're in. Regardless of whether you think we're in the 7th or 8th inning, we're closer to the end of the market cycle than the middle, in our opinion. So we think that there's going to be some more upside potential on the value names than the growth names. Growth has been such a driver up to this point. We think there's some downside potential to those names. So we're looking to do a slight shift towards value, and McDonald's fits perfectly into that play.
And lastly, Victoria, I know you're an expert on fixed income as well. How would you play fixed income treasuries at this point? Would you stay on the shorter end, or would you go extend longer now that the Fed's saying, hey, it's going to be patient, and some investors are betting the next move will be down instead of up?
Right. We don't really anticipate that the next move will be down, at least not at this point. We're looking for one more hike probably in this rate hike cycle. But we have been short duration for a long period of time, really taking more of that conservative approach and focusing on income in the portfolio. So just like on the equity side, we're taking a long-term look. We're starting to extend that duration a little bit as we get closer to the end of the cycle. But at this point, we're still short because we anticipate more volatility.
All right, thanks, Victoria. So take a look at McDonald's and Palo Alto Networks. Our thanks to Victoria Fernandez, joining us from Houston, Texas. She is with Crossmark Global Investments. I'm Fred Katayama, and this is Reuters.